All right, I'm Yahoo Finance executive editor Brian Sozzi. You're taking a look at a live shot of the opening bells on Wall Street on this Wednesday morning. Bullish, ringing the bell at the New York Stock Exchange on its IPO day. The crypto exchange raising $1.1 billion, giving an initial valuation of about $5.6 billion. Alt5, Sigma, and World Liberty Financial getting things popping over there at the NASDAQ in Times Square. Indeed, this is a market on autopilot, friends, or should I say a global market on autopilot. Here's where things stand as investors bet on a September Fed rate cut, and seeing as there is some tariff uncertainty. S&P 500 at a record, NASDAQ at a record, NVIDIA at a record, Japan's Topix exchange, you guessed it, at a record, Taiwan's major stock index at a record. I think you get the picture. Now, Opening Bid is all about serving up investing analysis you need to know to unleash the power of your portfolio. We're digging into what's really moving stocks, giving you the unbeatable context to make decisions. All that money in your portfolio, in part, fueled by this summer's face-ripping rally. Let's check in on the markets here and head down to the NASDAQ in Times Square and check in with Yahoo Finance senior reporter Ali Cannell. Ali, every single day it seems like there's a new record out there somewhere in these markets.
Yeah, 16th record close for the S&P 500 this year. But fun fact for you, Brian, that actually really underperforms what we saw in 2024. In 2024, we had 57 all-time highs, the fifth most of any year in history. So still a ways to go to see all those records that we saw last year. But then again, not too shabby to see consistent records here. And we are opening in the green. We'll see if we can notch maybe our 17th record close for the S&P. We are up about 0.3%. The Dow is up nearly 200 points, and the NASDAQ is up around 0.4%. Now, some individual movers here I want to focus in on after earnings. CoreWeave, this stock is opening down 11%, and this comes after the company reported earnings yesterday that missed the mark. They are not profitable at this point. They're not expected to be profitable until 2026, but we have seen this rise in shares since the IPO due to that AI story. There's still a lot of volatility in this name. It seems like analysts on the street are bullish over the long term here, but in the short term, we're likely going to see a lot of back and forth. If we take a look at shares over the past month, given the declines that we're seeing today, we are still up around 6%, but we were up around 20% prior to today. So just a name to keep an eye on. Also, Kava, disappointing on earnings as well. We're seeing the stock open down 20%. Revenue came in below expectations. They missed on same-store sales. They cut their full-year guidance for same-store sales, and it's a very similar story to what we've seen from other fast casual chains like Chipotle, for example. Chipotle shares this morning, they are up. Actually, no, they are down slightly here at the opening bell. But it just brings into question the value proposition for some of these companies and how consumer behavior patterns are shifting in this post-pandemic world. So all stories that we are going to be tracking and discussing this morning, Brian.
Ali, you're trapped in an island. You got a choice of two meals, Kava or Chipotle. Which one are you picking? Why?
I think I'm going to pick Chipotle because I just love my burrito bowl.
Fair enough.
I just have to be true to that. Got
to ask the questions. You just tee them up. Ali Cannell, we'll see you in a minute. All right, I'm out of the starting block, drilling into the biggest market drivers of the trading day. Here's what I'm watching. Number one, a market hooked on rate cut hopes. It's 35 days until the next Federal Reserve meeting, but stocks are forward-looking beasts, and this beast is banking on a September rate cut currently. There is a 98.2% probability the Fed cuts rates at that meeting, according to the CME FedWatch tool. Probability got a boost on Tuesday following a consumer price index reading that didn't signal accelerating tariff-driven inflation. Very important. Number two, the other side of the trade. I know this may come as a shock to you, but not every stock in this market is ripping higher. Quite the contrary. Take a look at the plunges in Kava and CoreWeave today in the wake of their earnings last night. The pounding should serve as a reminder to investors that in a hot market, no disappointments on an earnings day will be tolerated. No letdown in sales, no letdown in earnings, no letdown in guidance. Reports must be darn near perfect or else. All right, the opening bid roundtable for today. FM Investments CEO and CIO Alex Morris and Yahoo Finance senior reporters Ali Cannell and Inez Ferre. Good to see you all. Alex, let me get over to you. We were just talking about these big sell-offs in Kava and CoreWeave. Are these company-specific stories or the newest indicator that this is a market that is top-heavy and is completely ignoring a lot of key risks?
Well, I think those are actually specific to those independent companies, but it's a theme that you well pointed out that we've seen growing over the last 18 months. miss on anything on earnings and certainly retract guidance, and you will be penalized. Usually 15-20% right out of the gates, and you might earn some of that back over the course of the day. But this is a market, as things go up, that is not tolerant of anything being short of exactly what you forecasted and exactly what the market wants.
Alex, are you still inclined to buy dips on stocks here?
Names like this, I think it makes sense to buy some dips, but long term, I think if you really want to profit from this market, it's clear you just have to be diversified. Or recently, as we've seen that concentration back into the Mag 7, really just try to hold on tight through some volatility through those names if you want to see those sort of outsized returns that we're going to be talking about 2-3 years from now.
Ali, the sell-off in CoreWeave, I would argue, could have been worse. I'll have a little bit more on this on opening bid on the write-up after the show on our platform. But CapEx up $1 billion quarter over quarter. The third quarter guidance wasn't that great. Conference call was okay, but again, not a perfect quarter, and you're going to get penalized in this market.
Not a perfect quarter, Brian, and like we've been discussing, right? Stocks are at record highs. We've seen this run up in shares, and when you have that valuation story that had already been questioned with a company like CoreWeave, it's not a total surprise to see shares fall. Now, according to S3 Partners, more than a third of the company's shares are sold short, so again, a highly contested stock. And a bit of a quirk about CoreWeave is that it has a very high concentration when it comes to its customer base. Only a few big customers there, Microsoft being one of them. And after we heard from Microsoft this earnings season that they would be aggressively spending on AI, that led to a lot of the gains that we saw for this company. And when you talk to analysts on the street, they do say this is a company that's sitting at the center of the AI boom. There's a lot of tailwinds here. So the setup is positive moving forward, especially against these heavy hitters, pour more and more money into AI. But that doesn't mean that you're not going to see that volatility, especially with a name like this that is, heavily shorted. And again, that valuation we keep talking about since its IPO around 4 months ago, shares have just absolutely skyrocketed. So we are hearing some commentary on the street that perhaps we were due for a bit of a pullback.
Ali, this report from CoreWeave, I would argue, raises the bar from what the market will want to hear from NVIDIA when they report. I believe it's on August 27th. The positive thing here is if you're an NVIDIA bull, you were on that earnings call last night for CoreWeave, and you had to come away thinking, well, NVIDIA's going to knock the cover off the ball, Ali.
Yeah, look, NVIDIA is always important, and especially right now where we've seen a lot of the gains being driven by AI, the tech domination. If NVIDIA comes out and disappoints, that's going to be a big question mark to markets, especially considering what we heard from a lot of these hyperscalers. But I think you can read through the tea leaves on all of these earnings calls, and that does set up well for NVIDIA later this month. But when you have a stock market trading at record highs, a very top-heavy stock market, where the Mag 7 players just continue to outperform, just continue to drive this rally higher, you need NVIDIA, which is at the top of that story, the creme de la creme AI company. You need that company to deliver here. And I think there's a lot of tailwinds right now, especially with the deals that they are striking with the White House. They are now going to have access to sell those H20 chips to China, albeit they're going to have to share some of that revenue with the U.S. government. However, when you speak to analysts, that's well worth it to have that access to China, which is an increasingly important market to them.
Brooke, over to you on Kava. You've been covering Kava since the IPO day, and the stock has been celebrated ever since. Help us understand why the stock is selling off so aggressively. There were a lot of positives in this quarter. For one, they still reiterated their outlook to reach 1,000 restaurants by 2032. They're testing salmon. Who doesn't want salmon on a nice $20 Kava bowl? That's if you get double protein. But still, there were a lot of good things here for Kava.
Yeah, there were, and they're certainly testing a lot of protein because the consumer is wanting more protein. So they're leaning into protein. But as far as what they highlighted in their results, they talked about the honeymoon effect with the stores that opened in 2024, and they did overwhelmingly well there. But really, they also highlighted this fluid macroeconomic environment. And what they said is that this creates a lot of fog for the consumer. So during those times that the consumer tends to take their step off of the gas. So you're seeing Kava down 16%, but this really goes back to the point that was made earlier by Alex that investors want nothing short of perfection here. And you had Evercore ISI recently put out a stat basically saying that when a company this season has missed, the average stock has gone, those stocks have gone down an average of 7.4%, much more than the more than 3% over the last 5 years. So you're really seeing an outsized move with a lot of these stocks if it does not come in as the street is expecting. With respect to Kava, though, they did highlight this sort of stretched consumer. That's the takeaway that you got from some of the commentary that they gave during their earnings report.
And as you know, who was in a fog? Me, this guy, because you're clearly not Brooke. So my apologies on that one. So I'm going to give you another question off the jump. These sell-offs we're seeing, CoreWeave and the likes of Kava, doesn't it say that this market perhaps might be too top-heavy and it really is priced for perfection?
Yeah, completely too top heavy. You had Data Track Research recently coming out with some stats saying that the top 20 mega cap stocks by market cap in the index outperformed by more than 40% since the April lows, and that outpaced the S&P 500's rise of more than 27% since the April lows. So you are really seeing the largest cap stocks, the big stocks that are outperforming, that are driving these markets higher right now.
Alex, let me get back to you. Let's talk some Federal Reserve here, because you heard me at the top of the show. Now this is a market pretty much at 100% probability that we will get that rate cut in September. What would take the market down between now and that Fed meeting? It wasn't the CPI. In fact, that only fueled the rally. If it's not going to be CoreWeave and Kava, it's hard to figure out what truly gets some profit taking here.
You know, it's going to be really hard. First, I mean, I love the Fed Fund stat because it's one I get to make fun of often. It's almost always wrong. Although at this point, I think it's got a pretty good chance of, being right. Even a stop clock is right twice a day. But I don't know there's a whole lot that's going to stop this rally. We're in the sort of summer sugar high, summer camp. The Fed is not going to talk to us for another 35 days or so. Even Donald Trump going to Alaska talking to Vladimir Putin is probably not going to take us down very much. I think the market just has a lot of demand for more stocks. It is concentrated, but that's dragging lots of things up. The rise of new products where you can play 2-3 times these through ETFs has really driven this market up. There's been a lot of demand, a lot of interest from retail. And I think very little is going to stop us outside of, that truly exogenous, unforeseen event that we probably don't want to spend a lot of time worrying about because we can't predict it, and it's going to be pretty bad if it happens.
Alex, is a 25 basis point rate cut from the Fed, if we were to get one, is that really a big deal for stocks?
Probably not. I mean, I think stocks have already priced that in. They've priced it in not just today. They priced it in a month ago. They priced that in 6 months ago. The real messaging there won't be the cut. It will be how many more cuts do we expect to see? As you pointed out, 2 years ago, folks were calling for 7-8 cuts in the course of the year. We saw none. Things were fine. But I do think we are seeing a lot of structural weakening across various parts of the labor market and in other concepts. And it's really going to be the messaging from the Fed. Are we going to take this thing nice and slowly down?
Still, there's talk about a stagflationary environment. I don't see it. I mean, the economy is growing nicely. Inflation is what it is. I mean, we're not getting double-digit spikes in inflation, at least if you look at the CPI or PPI. I think it might be time to put that stagflation talk to bed.
Yeah, and you're not alone there, Brian. We had the Bank of America Global Fund Manager Survey. It was very bullish, very optimistic. The odds of a hard landing have basically evaporated at this point. But you are seeing some dispersion on the street when it comes to rate cut expectations. I just spoke with Morgan Stanley economist Michael Gapin yesterday, and he reiterated that call for no rate cuts this year, even after that CPI print. So really going against what the market is pricing. And he said it's because inflation does have momentum right now. We are drifting further and further from that 2% target that the Fed is chasing. And on top of that, we have a really tight labor market. Yes, the unemployment rate has remained low, but because of some of those immigration controls, the labor market is actually a lot more constricted than we previously had. So all of that is leading to his thesis that the Fed should remain on hold. And he's not alone there. We've heard that from other firms and some other economists out there. I think a lot of this is going to hinge on Jackson Hole and what Jerome Powell chooses to say, chooses to telegraph, and that could shift those rate cut odds a bit.
I wonder if Jerome Powell's going to go fishing. I mean, that's what they do here, right? They go fishing. If he catches a bass, maybe it's bullish for markets. Welcome back to Opening Bid. Betting on the flame-grilled Whopper. A note on Burger King, Tim Hortons, and Popeyes owner restaurant brands caught my attention today. Guggenheim analyst Greg Frankfurt is using the weakness in QSR shares to reaffirm a buy rating. Bold call, seeing as all restaurants are battling through consumer spending headwinds. See Cava's crash today. Frankfurt acknowledges the pressured consumer, but he thinks now is the time to hit the buy button as the company invests in a better restaurant experience at Burger King US. He also likes the momentum at Tim Hortons in its home of Canada and thinks that will continue. All right, let's fire up our stock of the day, and we're going to stay on restaurants here. I can tell you where I was 1 year ago today. I remember jumping out of my chair in astonishment at our New York City headquarters as news broke that then Chipotle CEO Brian Niccol was named the new CEO of Starbucks. I found the news mind-blowing for 75 different reasons, but I will offer two. For one, I just interviewed Brian a few weeks prior, and I definitely didn't get the sense he was ready to leave the Chipotle kingdom he had built. Two, while struggling and feeling the heat, Starbucks then CEO Laxman Narasimhan, who went by the nickname Lax, was still relatively new on the gig. Suffice to say, this was a big deal for Starbucks and for Brian personally. Stock surged 20% on the news. Niccol is one of the most highly regarded restaurant execs of the past 20 years. Now, since the appointment, Niccol has brought back condiment bars, good to see, pared back items on the menu that could be quantified as silly. He has tried to bring down mobile order wait times. He has put the China business up for review. Many new menu items will hit stores soon, such as coconut water infused coffee. Jazzed up about that. The overall business hasn't turned the corner, though, but the pump is primed for better results over the next 12 months. The stock's valuation reflects that hope. Here's Brian in his own words when we last talked 2 weeks ago.
I think there were some choices made before me that really set us back on our ability to create that great customer connection between our barista and customer and provide the type of customer service that the Starbucks brand, frankly, is known for and should be known for. And so that's really why we created the Green Apron service model.
Still with me, my roundtable of pros, Alex Morris, FM Investments CEO and CIO, and Yahoo Finance senior reporters, Ali Canal and Inez Ferre. Alex, I want to get over to you here. So Starbucks clearly in turnaround mode, still valued as a growth stock and still trading at a premium to the broader market. Does this name interest you at all?
Yeah, I mean, Starbucks has long been proven somewhat inflation-proof. Prices go up, lines keep getting longer. And as you point out, mobile wait times they're coming down, but they're still pretty long because folks want the product, and you don't see a lot of competitors coming into the space. So it's a name we've liked for a long time and still like. It's getting a little frothy maybe, but it seemed to be able to pull through on a regular basis.
Inez, how can one not get excited for coconut-infused coffee? And then I didn't mention there as well, they're coming out with protein coffee. That sounds like a same-store sales driver to me.
Everyone wants protein. Look, Brian.
Yes, we do, Inez. Yes, we do.
Yeah.
Yes, we do.
Yeah, and I think this strategy of making the coffee house shop environment more inviting, I think that's going to be very key, because if you have less people that are going into the office or working hybrid, so to speak, then there's no reason why they may go through the drive-through as much. So you did have Starbucks that recently announced that it was going to close some 96 shops of its drive-through only shops. So it's that bringing Starbucks back to its roots of being an inviting place, of making it less dim, the furniture less dark, and they have these wooden chairs that are not that comfortable right now. So I think that this is all going to very much benefit Starbucks, getting the ceramic cups back into the shops for people that want to sit there and just sip their lattes. That is going to be key, because it will drive customers into those shops and bringing it back to its original roots that we all know Starbucks to be, and why you would want to pay $4 for a latte.
$4 for a latte, Inez, it's more like, I don't know, 7 or 8 in some cases, but I'm glad you were telling us how you feel about the Starbucks experience. Ali, over to you. I think Starbucks is going to get things right operationally. Brian is one of the best restaurant executives I've ever known. But what has to turn is the economy. And what we heard from Cava last night, what we heard from Chipotle about 2 weeks ago, it's the economy still under pressure, and consumers are not visiting these locations as much as they were.
Exactly, Brian. And even Brian Niccol told us on our air that the value proposition story for Starbucks is getting better, but it's still not fully there at this point. And I think the bar is just higher now for consumers. And we've seen 6 straight quarters of U.S. sales declines. Now, I will say that Wall Street is a bit more optimistic over the long term. Baird recently upgraded Starbucks to outperform from neutral. The firm did say it expects more visibility when it comes to the company's turnaround plan, and that will become clear over the next several quarters. So I think that's the story for Starbucks. You just really have to wait to see this turnaround take shape. You need to give Brian Niccol some time there, but we also have rising competition. Dutch Bros is a much smaller company by footprint. However, their same-store sales have been crushing, and the street has even said because of that, that's taken away some market share from Starbucks. So this is a long-term story, but I completely agree with Inez because it is getting harder and harder to go out there and find a coffee shop where you could just sit there and bring your laptop. A lot of these places don't even let you bring your laptop anymore, which I don't quite understand. So I think getting back to the roots is going to be key for Starbucks, creating that experience.
Man, the Yahoo Finance team really fired up about Starbucks. All right, it's time now for our question of the day. Clearly the market is rocking its rose-colored glasses this summer, but not to rain on anyone's money-making parade. There are 2 near-term geopolitical risks to not overlook. 1, the clock is ticking on another Trump-China tariff extension, and 2, the Trump-Putin meeting on Friday could have a range of outcomes. So my question is this: is the market prepared to handle a geopolitical shock? Alex, what say you?
I think they are. I think things are expensive now, and we'll see something happen. We're probably going to get another extension on that tariff with China. We're probably going to see something not terribly helpful come out of Alaska, but the market, I think, is primed and ready for it.
Inez, I appreciate what Alex said there, but I'm in the camp that this market has totally forgotten about geopolitical risks, and they're going into that Trump-Putin meeting on Friday not expecting much, but maybe they should expect a lot more.
Yeah, I think that there are 2 key points that I'm looking at when it comes to geopolitical risks. One is oil prices, which Trump wants those oil prices lower. It's the fact that in September you're going to have the oil caps on Russian oil from the Europeans. So how is this going to impact the oil market? And is Trump going to use oil at all or sanctions on oil at all in some of these negotiations? The second one being for China, rare earth minerals, which are crucially important for the U.S. and for every part of the industry of the U.S. So I do think that China will come through at some point. Like Alex said, there may be an extension because that is the big important deal.
Way to bring the heat, you all. Big thank you to my roundtable on this Wednesday morning. Appreciate it. All right, here's my forward-looking thought of the day, friends. All of the market rally is seemingly on autopilot. It's still good investing hygiene to study the stock valuations on some of the world's hottest stocks. We can all use an investing sanity check every now and again, and in some cases, a very good laugh. One stock that continues to make me laugh is Palantir. Stock now trades at 300 times forward earnings and is led by a CEO in Alex Karp that loves the sound of his billionaire voice on earnings calls. To say this valuation is a stretch is an understatement, using all forms of reasonable assumptions of future earnings and cash flow. Proceed with caution. But I want to hear from you. Why do you love Palantir? The company's current valuation suggests you are absolutely obsessed with Palantir. Send me your thoughts on X at Brian Sozzi, and let's have a chat.